Now we're going to look at taxpayers with regard to their filing status. And the filing status for an individual taxpayer is important because it determines the exact amount of the standard deduction and also the tax rates to be used. And you need to know when filing status is determined. And it's determined on the last day of the year. So December 31st determines your filing status. Were you single on that day? Were you married on that day? Were you still married on that day because you didn't get divorced until early next year? How many filing status are there? Well, up at the top here, there's single. There's married filing jointly, which is like this tax return for this married couple, Phil and Shelley Strickland. They're filing jointly, which means they're filing one tax return, and all their combined income and deductions will go on this one joint return. If they're married and they don't want to file jointly, they could married filing separately, but that's usually not a good way to file because they're probably going to pay way more tax if they file separately, two separate returns, than if they file jointly. Then what about these other two filing status, head of household and qualifying widow? We're going to go through each one of these and see what the exam expects you to know. And so far we said that the exam expects you to know that the filing status is determined on the last day of the year. All right, here's an example of filing status. Luke and Tracy are single all of year one. And on December 31st, they fly to Las Vegas and they're married just before midnight on New Year's Eve. They're considered married for all of year one. Why? Because filing status is determined on the last day of the year. Even though they were both single for 360 plus days of the year, filing status is determined on the last day of the year, not on the majority of the year. All right, what would you do with a question like this? Which of the following is correct regarding filing status? A taxpayer's filing status determines the standard deduction. Yes, it does, we said. B, a taxpayer's filing status determines the tax tables to be used to calculate the correct amount of tax. Yes. C, a taxpayer's filing status is determined on December 31st. So all of these are correct. Letter D is the answer. All right, so married filing jointly, that's two taxpayers who are married. They file a combined tax return. Married filing separately, two taxpayers who are married, but for some reason choose not to file a joint return. What could some of those reasons be, since we said it's going to be less costly to file jointly? Why would taxpayers who are married choose to file separately instead of jointly? Well, there's no real good reason for it. There's two reasons, and they're both bad reasons. One is if one of the taxpayers is maybe doing some illegal things and the other taxpayer doesn't want to be associated with that, then the alternative would be to file separately. And then the other reason to file separately is if you're about to get a divorce, you're still married, but you're not really communicating. So you can't file a joint return if you don't know how much the other person earned, and if you're not talking to them, it's going to be very hard to file a joint return. So that's when you just decide, hey, I'll pay the extra tax. I just don't want to communicate with this person right now. Single, that includes divorced individuals and anyone who's legally separated. The exam will say that you have a legal decree of separate maintenance. That means you're legally separated, and if you're legally separated, you're no longer married, and if you're no longer married, you're going to file single or maybe some other way like head of household. Let's try this. Luke and Tracy are married for all of year 21, but then decide to get a divorce in February of year 22. So they're married for all of year 21. They decide to get divorced in February of year 22, and it says that's prior to filing their year 21 tax return. Their most likely filing status for year 21 would be which of the following? And the answer would be married filing jointly, because filing status is determined on the last day of the year, and since they were still married on December 31st, year 21, they would likely file a joint return. They could file separately, but that would be more expensive. More tax would be paid if two spouses file separately compared to one joint return. So their most likely filing status for year 21 would be married filing jointly. In year 22, if they would have asked, they'd be unable to file jointly because they would be divorced by then, assuming they were divorced in 22. Then the best they could do in 22 would be to each file single. But the question asked about year 21, and the most advantageous way to file is how you would answer the question. The most advantageous way is the way that you would be expected to answer, because most taxpayers want to file in a way to minimize taxes. So that's why the most likely filing status for year 21 would be married filing jointly. Now, of course, they would have to be talking to each other, but if they weren't, the exam would tell you, and then the answer would probably be married separate. But don't assume married separate unless you know the facts. Just because they're getting divorced doesn't mean that they're going to file separately. They're still going to file jointly the most advantageous way if the exam asks you a question like this. If it says their most likely filing status for year 21, you would have to answer married filing jointly because that would save them the most tax. Now, I told you there were disadvantages of married filing separately compared to married joint. What are some of those disadvantages that they might ask you about? Well, for married couples, we know it's better to file one joint return than two separate returns because if one spouse itemizes, the other spouse must itemize also. So if you decide to file separately two separate returns and one spouse itemizes on their separate return and they file first, then the other spouse who didn't file yet is going to have to itemize also. And this has to do with itemized deductions versus the standard, right? Sometimes the standard is way better. But if one spouse itemizes, the other has to itemize if they file separately. Okay, neither spouse can claim the earned income credit if they file separately, which is a really nice credit if you need it, but you'd have to file married joint or single or some other way, head of household. You can't file separately and get the earned income credit. There's other credits you can't get either if you file separately. The child independent care credit is another one. You can't get that credit if you're married separate. Also education credits for college or adoption credit. Can't claim those credits if you file separately. So these are all the reasons why married separately is just not a good way to file. Another reason is the deduction for net capital losses is limited to $1,500 per spouse rather than the $3,000 that you would be allowed on a single return, a joint return, or head of household. All right, this one. Luke and Tracy are married for all of year 21, but then decide to get divorced in February of year 22 prior to filing their year 21 tax return. Which of the following is correct? A says if they file married separate, they're unable to deduct capital losses. No, they're not unable to deduct capital losses. It just means that instead of a $3,000 capital loss deduction, they would have a maximum of $1,500 each per return. B, if they file married joint, they're unable to claim an education credit. No, if they file married joint, they can claim an education credit. If they file married separate, then they can't. C, if they file separately and Luke itemizes, Tracy must itemize as well. That's correct. Letter C is the right answer. So it's not D, all of these, because only letter C is correct. All right, let's talk about the filing status known as qualifying widow or widower. So while filing status is normally determined on the last day of the year, if a spouse dies during the year, filing status will be determined at the date of death. Which means if they were married at the time of death, which they probably were, whatever day the spouse died during the year, the filing status will be determined on that day. Because if we use December 31st, then they weren't married anymore, obviously, because there's only one spouse left alive. So that means in the year a spouse dies, the remaining individual still files a joint return one last time for that year. For the next 2 years, the taxpayer may be able to file as qualifying widow or widower if they have a dependent child living in the home for the entire year. And filing as qualifying widow gives the grieving spouse the same standard deduction as on a joint return, as well as the same tax rates as a joint return. But remember, you can't file jointly after that year of death. That year of death is the last year you can file jointly. And then for the next 2 years, you can file as qualifying widow, which gives you the same standard deduction as the joint return, same tax rates as the joint return. So let's say here's the Strickland's return, and towards the end of 2020, Phil died. So then they could still file jointly one last time in 2020. Notice it's still married filing jointly, even though Phil died towards the end of the year. For the next 2 years, Shelley will file as a qualifying widow because she has dependent children. All she needs is one dependent child, but she has several. So she would be able to file as qualifying widow for the 2 years, 2021 and 2022. But after that, after 2022, let's say the kids are still living with her, the best she can do is file as head of household. Because you can only file qualifying widow for the 2 years after death. So if Phil died in 2020, they still file jointly for 2020. 2021 and 2022, Shelley files as a qualifying widow, and she gets the same standard deduction and the same tax rates as when she was filing jointly. But then for 2022, the best she can do is file head of household, which is better than having to file single, but not as good as married filing joint or qualifying widow. All right, here's the kind of question I think you would see. Leon's spouse died in year 1. Leon did not remarry. He continued to maintain a home for himself and his dependent infant child during year 1 and year 2, providing full support for himself and his child during these years. Leon's filing status for year 2 is what? Okay, so they asked about year 2. If they would have asked about year 1, the year the spouse died, you'd say married filing jointly, letter C. But they didn't ask about year 1. They usually won't on the exam. They'll usually ask about year 2 or year 3 or maybe even year 4. For years 2 and 3, since he has a dependent infant child living in the home, then the answer is going to be qualifying widow with dependent child, and that's letter D. So letter D is the answer because in the year a spouse dies, that was year 1, the surviving spouse normally files a joint return, but they didn't ask about year 1, they asked about year 2, and that would be qualifying widow with dependent child. And that would be the same for year 3, should they have asked about year 3, would also be qualifying widow with dependent child. Now, what if they asked about year 4 or beyond? Then the answer would be head of household. So for Leon to file as qualifying widow in year 2, Leon would have to have this dependent child living in the home for the entire year, not just half the year or a part of the year or more than half the year. No, for qualifying widow with dependent child, got to have that dependent child living in the home for the entire year, and it says that Leon has that, so the answer would be qualifying widow with dependent child. All right, Betty's husband died in year 1. She did not remarry. She continued to maintain a home for herself and her dependent infant child during year 2, year 3, and year 4, providing full support for herself and her child during these 3 years. For year 4, Betty's filing status is, so we know if they asked about year 1, the answer would be married filing jointly, but they didn't ask about year 1. If they asked about year 2 and 3, it would be letter C, qualifying widow with dependent child, but they asked about year 4, and the answer would be head of household, which is letter B. And we'll talk about some more rules that surround the head of household filing status, but for now, I want you to think of head of household as the filing status for a widow when they can no longer file as that surviving spouse. So Betty's considered a surviving spouse in year 2 and 3 when she can file as the qualifying widow. Once she goes past that status, once year 4 comes along, the best she can do is head of household, which is a better way to file than single. Because if it wasn't for head of household, Betty would have to file single in year 4 and every year after that. But because there's the head of household filing status, it's a little bit better for her than having to file single. Not quite as good as married filing jointly or qualifying widow, but you can only do that for the 2 years after death.